I'll be back.
Hello everybody and welcome back to the channel, and today's video that is going to focus on the renewable industry. We are going to zoom in on the recent events over the past weeks where a lot of the renewable energy stocks have been slammed completely in the market. We're going to try to explain to you why we think this is the case, and we're going to try to help you as an investor to position yourself best possible for the future in regards to renewable energy stocks. Well, this reminds a bit, without being overly dramatic, about the dot-com bubble that we saw in the early 2000s, where a burst in the technology bubble sent share prices plunging. Back then there was also a lot of investors who had invested what we would consider quite blindly in the IT sector with the dream about becoming really rich really fast, but instead what happened was that some of these fall from the sky and basically their wealth got destroyed. On the channel we have also talked a lot about the potential bubble within the sector, and more specifically within hydrogen. As we mentioned in our separate video, we were benchmarking some of the fuel cell stocks, hydrogen stocks that we have analyzed, and we saw what were their revenue per share, what were their current share price, what were their price to sales ratio, and we compared it with Tesla, which was at the time close to its all-time highs, which had a significant price to sales ratio, but some of these hydrogen stocks had the double. What we mentioned specifically was that for some of them, we just couldn't see that this was justified by their revenue, not just currently, but also in the future from a growth perspective. And the same with the earnings, where it's doubtful whether they will become profitable at all. So the potential bubble within the sector has basically been growing on the basis of a huge appetite in investing in companies like this that has an environmentally friendly outlook. And it has been like, no matter what they were doing, if they were doing something within this sector, the share price should go up. And what we said is that in the end, reality will kick in, and it seems like this is what is happening as of right now. So again, in this video we will try to help you a bit and try to say what we think you should be doing as an investor. So back in November 2020, we covered some renewable ETFs like the ones that you're seeing here, the iShares Global Clean Energy ETF. This was actually not one of the primary ones that we recommend, but what we said in the video was that all of them had a decent outlook. And we mentioned that despite them have already gone up with more than 100% since the coronavirus hit in. So, but what happened subsequently was that the ETFs continued to go up, and at one point it was up with more than 75%. A share was costing 34.25 USD. So at some point, things cannot continue to go up. There will come a pullback. It was going to be inevitable that this was going to happen at a certain point. And as we can see now, it has had a huge drop since its height, and it's down now to 21.78. So around the same price as when we did the analysis. Does this mean that we do not believe in the ETFs? No, not at all. It just meant that at a certain point it had increased so much without perhaps having the right justifications for it, and therefore there was going to come a pullback of some sort. And this is also why we at certain times have said to some of the people who are following our channel on a more regular basis, perhaps it's a good time to take some profit now. Things have gone up considerably, and by taking some profits now, well, you protect yourself in case things starts to fall down, and it may also give you some cash on the side, which is good because that enables you to buy down on the dip, which we are seeing now, and obviously there will come good opportunities out there. When we ran our CMD portfolio around 1.5 months ago, we mentioned, for example, that we had bought and sold Enphase Energy. Enphase Energy is, in our opinion, one of the best renewable companies out there at the moment, but it had, in our opinion, become too expensive when it hit around 150, and we therefore decided to sell it. Well, what happened with Enphase Energy was that it shot up to around 230 before it has now fallen down to 133. Obviously, it would have been optimal to sell at the height, but that is obviously a very difficult discipline to master completely. And again, it's not to say that we were right. However, we had a feeling with Enphase, which is one of the better ones, but had also seen huge increase in the share price. Well, it was becoming a bit expensive, and that was why we decided to pull out. Unfortunately, we had a similar situation with Canadian Solar, which we did not sell, and we are now back to square on those. However, in our opinion, although it had gone up a bit, we did not feel it was as overvalued as Enphase at the time, and that was why we stick with it. It is, though, very important for us to say that it's not all doom and gloom at the moment. Just because a price bubble or price bubbles exist within specific parts of the renewable energy sector, it does not mean that the whole sector should be avoided at all. There are areas such as hydrogen fuel cell development, which in our opinion, the current share prices are based more on speculation than reality. But if you are selective and cautious about the renewable energy sector and the companies that you choose within, we still believe that you can make good money in the future. And we think that, again, you should take this drop as an opportunity to invest in some of those companies who have actually proven that they can deliver some really good results. So if we were to benchmark between investing in an ETFs like the iShares and picking individual stocks, well, we definitely think that the ETFs will catch up again, but we think that the most value will be gotten in picking the long-term winners. So that's basically the key at the moment. And in our opinion, there's still plenty of companies out there which has provided solution, which will be rewarded if you are a long-term investor. So again, we have tried to do an overview of some of the companies that we have here. Again, the list is not exhaustive. And again, delivery does not mean that they are all cheap at the moment. It's the one we have in the green section. However, those are the ones that for us have actually proven that they have delivered solid results and which we think will continue in the future based on what we have seen so far. You have Enphase Energy, you have Jinko Solar, you have Daqo New Energy, you have Vestas Wind Systems, you have Senior Solar, you have Canadian Solar, and you have Linde. So again, still quite a lot of different companies. You have some solar company, you have some wind turbine manufacturer, and you have a larger conglomerate which is also focused on the hydrogen sector part. Then we also think that there is some that is more height-based, which we think are not finished with falling down. We do understand that at the moment everything seems to be fallen. However, we think that the reduction in the share price of those companies are a bit more justified. We have Fuel Cell Energy, which again had a tremendous run up with more than 1,000%. We missed on that. We have said that a lot of times. However, we do not feel that was justified at all from the numbers. You have ITM Power, which also defies all logic in terms of revenue versus the current share prices. We have Sunrun, which is in our opinion one of the worse solar companies, at least based on the numbers. We had PowerCell that we covered, another hydrogen company from Sweden, and we had Sunnova, which was not the worst one overall, but again they just had a huge deficit, and we didn't really see that the numbers were necessarily justifying. We said, okay, if there's a turnaround, this can be good, and so far that has not proven. So again, if you are investing or interested in investing in the renewable sector, it's still strong. It is going to grow in the future. It's not going to go away. It's maybe going to take a pause over the next period, but then it's going to come back strongly in our opinion. But we think it will be a better idea to pick some of the more better suited companies that have actually delivered results, as we see here on the left side of the table. While as the other ones, the hype-based ones, they may start to deliver results. They may still also go up again based on hype and speculation. But if you want to take the more safe bets, you will go on the ones on the left side, in our opinion. Well, this was all we had for today. Please keep in mind that we are not professional financial advisors, and this is only done for entertainment purposes. Please subscribe for future content. Please give us a like. It really helps with the algorithm. And please provide a comment in the comment section. What do you think of this? Do you agree with it? What is going to happen with the renewable sector moving forward? Is it going to fall significantly more overall? Is it going to be individual stocks? What is going to happen? We always appreciate your input because, as we always say, we do not know everything. Besides that, there's not much more to say than stay safe, have a nice day, hasta la vista, baby.